more in a Spanish sense of the word. You know that in Spain they generally have lunch at 2 p.m., 2:30, and the same shall be for us as well. But we need some time because we are going to focus now with the three forthcoming presentation on one system. Different countries, perhaps different regions, but different system. The first one shall be by Xiaoshan Yang. I exercise myself so much to spell appropriately Chinese, but I'm so poor about that. So I apologize for this. But yeah, he's going to give the first perspective, the perspective of mainland China. Then you are going to have a Taiwan perspective, and at the end of the morning, even the Hong Kong one. So thank you for coming. Thank you very much.
Thank you very much. Thank you very much.
Microphone.
Thank you for this conference. And I will this morning I will talk about I will talk about a really technical question. Focus on the legal valuation in Chinese VAT and the business tax. And the legal valuation, tax valuation is a new research area in China, and in this year I focus on this area. And the first I will give a background, because I focus on the VAT and the business tax. In China, the VAT and the business tax are indirect tax. In China, indirect tax include 4 types of taxes: VAT, business tax, excise tax, and custom duty. This is indirect tax. And generally, in nature, from the nature, an indirect tax is an ad valorem tax. So for this kind of tax, the tax base based on the value of goods and the service. So the value is really important in calculating the indirect tax. Now, if the tax rate is fixed beforehand in advance, so the second is overall tax liability will depend on the value of goods and the service. So for an indirect tax, value is most important. The second important components. I read a book written by tax court in the United States, David Lalo. He both also published a book on tax law and valuation. And in his book, he wrote, now valuation is still permits or tax law and regulations. And continue, some people have estimated that there are several hundred sections in internal revenue code, as well as thousands of references in the tax regulations that deal with fair market value. So the market value become the same in China's tax law and regulations, become more and more important. So I often think that tax law not only has to give a reply of the transaction's nature, but also deal with the quantification of a real transaction. Quantification is very important, especially for our legal professor. We just pay attention to the nature and the discussion, but we often don't care about the quantification. Actually, quantification may be very important in the tax levy. So, how to measure the value is not only the technical point. I think it is this way leading to tax justice. I think that. So in my article, I have submitted my article, and yesterday I found Michael has uploaded to his website. My article analyzes current tax legislation on legal valuation, and this problem focuses on VAT and the business tax. Actually, the legal valuation is very important in income tax and property tax. In property tax is most important actually. But in China, in mainland China, few literature talk about the valuation in VAT and the business tax. So I focus in this side. In China, I'll give you some background. In China, VAT and the business tax, they're most important in China. We can see the chart. In China, the VAT is the most important tax in China. About VAT yield 34% of the total tax revenue from VAT. So VAT is the biggest tax in China. So to protect VAT in our criminal law, in Chinese criminal law, there is death penalty to protect the VAT. So in China, if you just the death penalty just to protect the VAT, but don't protect the other taxes. So in China, if you waive the VAT, that's dangerous. But you waive the other taxes, no problem in China, because the VAT is about 34% of the total tax revenue in China. But this problem in China, in 1994, Chinese government introduced the VAT from the European model, actually. So Chinese VAT system is very similar to the EU sixth directive system, because in 1994 we introduced directly from the European model. But in 1994, in the legislation, Chinese goods and service tax was divided into two kinds. One is VAT, another is business tax. That's a problem. But in recent years, the central government had to merge two taxes into one. So in 2008, the NPC, National People's Congress, had made a legislation plan. Hope to within 5 years, we will merge business tax into VAT. But now it's separated two kinds. In China, the VAT just levy on the sale of movable goods, but the business tax levy on transfer of intangible assets and movable property. The service side is just processing, VAT just levy on the processing service, repair service, and the replacement service. This is background. And for VAT, I give a chart. There are three tax rates: GLO rating, and the normal VAT rate is 70%, and the lower rate is 13%. The business tax, three kinds of tax rate. The lower is 3%, and 5%, 20%. Okay. Now, give them background. Now we will move to the legal valuation. In China, in Chinese tax law and the regulations, legal valuation is stipulated not only in tax law, actually in business law. What's the aim of legal valuation? In the book, in the theory book, you can say we search out an open market price. But focus on the VAT and the business tax, we want to search out an open market price of goods and service. How to search out the open market price? Actually, it is very difficult. Very difficult. In China, Chinese law, after my research, I find that there's at least 3 steps used to reach the open market price. In tax law, focus on tax law and the tax law. The first method is we use the average sale price methods approach to search out the open market price. This is the first method. And this kind of method used in the VAT and the business tax. For example, I give out the legislation of the Chinese VAT regulation. Our VAT is just very low level, just the regulation, not reach the lower level. In the current Chinese VAT regulation, they give in the Article 16, they give you out a standard to search out the open market price. The sphere of application is where the price charged is obviously and unjustifiably low, or where second sphere is there's no turnover for the deemed sales of goods. Under the above mentioned the two situations, the authority in charge shall have the right to determine the turnover in the following order. I'll give out the method to search out the open market prices. The first approach is the turnover shall be determined by the tax authority based on the average sale price. This is the the standard. Average sale price of similar goods of the taxpayer taking place in the most recent period. This is the first stance. Second stance is turnover shall be determined based on the average sales of similar goods or of other taxpayers taking place in the most recent period. Actually, the first and the second use the same standard, average sale price, but based on different taxpayer. The third is, if we can find if the first standard or second standard are not used, then we'll turn to the third method. We'll use the income approach, cost plus. Give out the formula is in the law. In the law, the regulation is turnover is equal to cost times 1 plus actually the cost plus. This stance, average sale price standard, actually was made in the 1994 VAT regulation. This is the first stance in Chinese VAT and the business tax to calculate, to search out the open market price. This is was made in 1994 VAT regulation. But in 2009, Chinese government amended the 1994 VAT regulation. In our 2009 amendments of VAT regulation, there's no change on the explanation and the standard. Still, we respect the older standard, average sales standard. But in the Article 6 of Chinese VAT regulation, they give out a sequence for valuation. The first choice is to adopt a market approach based on average sale price of similar goods in the most recent period of the similar goods. The second choice is still in market approach based on the average sale price of similar goods of other taxpayers. Now the first is the same taxpayer. The second is other taxpayers. The last choice is fall back on income pledge based on cost plus formula. The precondition is there's no market price. This precondition. In 1994 Chinese VAT and the business regulation, why do we choose this standard? What's the theoretical foundation and benchmark? I think maybe the benchmark, the theoretical foundation is on legal justice. Justice is the benchmark and the starting point for us for the legislation, because justice strengthens equal treatment of equals. So we must find the identical price or most similar price. This is our benchmark and starting point. There's similar legislation too in Chinese business tax too in the Article 20. I just analyzed the Article 60 of Chinese VAT regulation. Actually, you can find the same legislation in Article 20 of Chinese business tax too. But I will analyze that. The Article 16 of Chinese VAT regulation gives out a standard to search out the open market prices on the average sale price. Actually, this standard incurs many problems. The first, because of many problems, problem is for the tax officer. I often discuss with this article with tax officer. The tax officer often say that it's very difficult for them to find the related reference prices. If you use the average sales prices standard, you must find lots of information on the market price and for averaging. But it is difficult for them to find this information. Second is use the average sale price standard. This problem is we determine the current transaction price on the basis of past transaction prices. So some taxpayers think the market change is not reasonable, is not scientific actually. This second problem. The third problem is we use the average sale price to convert a search out of the open market price. It easily incurs corruption. For example, some tax officers just choose the lower prices for averaging. They discard the high price. That's a problem. If I have good relationship, the tax authority tax officer have, I say, good relationship with the taxpayer, they will choose the lower prices and they discard the high prices. It's very difficult to control this situation. That's the third problem. Actually, in reality, I talk about with many tax officers, many students of my tax officer. I often talk with them. The student told me actually they discarded the first and the second choice. They directly choose the third choice using cost plus formula because it is very safe for the tax officer. If you choose the first one, second one, you have to find the information of the market price. It's very difficult, and you have to prove, you have to bear the burden of proof, many problems. So they choose the third one. Actually, it is safe for the tax authority, they say. So this is against the law. According to Article 6 of the Chinese VAT regulation, this order, first, second, is first, second, third choice is the sequence. But many tax officers are against this law and they choose the third method directly. That's a problem. I mentioned that the first, second part. The third is the second standard. The first standard is average sale price. We can find in VAT and business tax. Actually, in Chinese tax law, there's a second method standard. We use the market price standard. Market price standard is very popular in Chinese business law, actually, but very few in Chinese tax law. We can read this standard in many Chinese business legislation. For example, in tort law, our Chinese tort law is very new, just became effective last year. And in the Article 19 of tort law, we directly use the market price approach method to calculate the property damages. They use the Chinese market price directly. The second is in the property law. In the property law, we use the same words, market price. In this bankruptcy law, we use the market price standard directly too. But in Chinese tax legislation, I checked all the Chinese legislation, just found in the deed tax. It's just in the deed tax. In the deed tax, there's a provision, deed tax in the Article 4, use this word, market price. And we can read the article. They say in the second is kind of question, obviously rationale of without just reasons, the basis we shall be verified and determined by the collection authorities refers to market price. We use this standard. This is the second standard. The third standard we find in Chinese legislation is fair value. Fair value. The first is average sale price in Chinese VAT and the Chinese business tax. The second is market price in deed tax. The third, very new, we introduced the fair value, this new standard in the corporate income tax in 2008, this very new standard. Because in 2007, Chinese government amended the accounting standards for business enterprises. In these new accounting standards, we learned directly from the international accounting standard directly. So maybe the Chinese, the Asian countries first one to learn, they introduce all the international accounting standards directly from the in this accounting standards we introduce the newer standard for fair value for the accounting measurement. Fair value, what's fair value? The Article 42 of the accounting standard for business tax standards give a definition. This definition from the accounting standard This definition is assets and liability are carried at the amount for which an asset could be exchanged and agreeing parties in an arm's length transaction. This is in accounting, Chinese accounting standard definition. Now, the fair value standard has been influencing greatly in tax valuation actually. For example, in the new Chinese corporate income tax, our Chinese corporate income tax became effective in 2008 after the publication of accounting standard. In 2007, Chinese government introduced the international accounting standard, introduced the fair value standard. Then, in 2008, we issued our Chinese corporate income tax law. And in this law, we adopted this standard, fair value directly. In the Article 13, you directly use the fair value standard. The article is here, shows the value of non-monetary income derived by the enterprise statism should be determined based on this fair value. This is a new standard. What's fair value? And in Chinese corporate income tax, the income tax gives a definition of a fair value, refer to the value that is determined based on the market price. And so, in summary, in Chinese tax legislation, actually, we adopt 3 kinds of approaches, methods for the legal valuation. The first is average sale price in Chinese VAT and the business tax. Second is market price used in the deed tax. The third is fair value, representative within the new corporate income tax. The third is sphere of the application. In where areas we use the legal valuation, for example, we'll focus on business tax and VAT. The first is in the transaction, non-monetary consideration transaction. We need a legal valuation. What's the non-monetary consideration? I read there's a definition in Australian GST law. In Australian GST law, given definition is includes providing goods, granting rights, or performing a service, and entering obligation, for example, refrain from selling a particular product. This is an Australian definition. But in China, in China's law, VAT regulation, we give a definition too. What's the non-monetary consideration in the Article 3? This definition. Consideration includes money in any currency, goods, and other economic interests. So we often think that goods and other economic interests belong to non-monetary consideration. This is our definition. We can find the definition of non-monetary consideration in Article 4 of Chinese VAT regulation. They mentioned that the following activities conducted by the entity or sole trader shall be deemed as sales goods. For example, in the clause of 5th clause, using goods that taxpayer produce itself or engage in others to possess for collective welfare or personal consumption, and the donation, distribution to the shareholder, and the visitor, and the gifting gift to the other person. Under these circumstances, they belong to non-monetary consideration. And there's a similar provision in Chinese business tax too. Under this, if your transaction belong to a non-monetary consideration or deemed transaction, then we need a legal valuation. We need a valuation. What's the standard for this transaction? We mentioned in Chinese VAT and business tax, the first and the second choice is we use sale price standard, the average sale price standard. This is a first sphere of application. The second sphere of application is we use under the situation is obviously and unjustifiable relatively low price. For example, anti-avoidance related parties transaction. In these circumstances, we need a legal valuation too. We can read this article, find this article in Article 7 of Chinese VAT regulation to mention that if a transaction, selling goods or providing service is obviously and unjustifiably low price, the authority will determine the amount of turnover. We can find the same provision in Business Tax 7. And the Article 7 of Chinese VAT regulation and Article 7 of Chinese business tax, we often think this both belong to anti-avoidance rule. So we often take like that. Under these circumstances, it means that if a contractor party sign a contract in a low price, then the tax authority will not accept the price. They will adopt the average sale price standard to determine the turnover. The question is, just second sphere of application, this question is, what's the criterion to judge an obviously and unjustifiably low price constitute? How can we say that? Actually, for this problem, there's no criterion in Chinese tax law. That's a problem. Just fully depends on the tax officer's discretion. That's a problem. So, because no standard, no criteria, specific criteria for guidance for the tax officer, so in reality, it's dangerous. The tax officer told me they often either they have a choice. One choice is they not exercise of discretion. The second is abuse of discretion. So that's a problem. So how to deal with this problem? Because I often have some lecture in Guangdong, my home city, for the tax officer. I recommended them to refer to the Supreme Court's criteria. Actually, is Chinese Supreme Court given criteria to judge what's the low price. We can find in 2009, the Chinese Supreme Court in second interpretations concerning the application of Chinese contract law give a criteria. We can read the criteria. According to the Supreme Court, if a transfer price is less than 70% of the government guided price or market transaction price at the transaction location, then it may be regarded as obviously and unjustifiably low prices. So Chinese Supreme Court given the criteria, but in tax law there's no criteria. That's a problem. Whether Chinese tax authority can introduce or learn directly from the Supreme Court's criteria, that's a problem. The tax officer they are afraid after that because there's a legal failure is an obstacle. But actually in Guangzhou, my home city, because I often have lecture for these tax officers, I encourage them to adopt these criteria. So in many tax cases, actually, my home city tax officer often use this criteria. The third sphere of application is in the relationship of VAT and custom duty. In China, if you import goods from other foreign countries inside the territory of China PRC, you have to declare and pay custom duty. Then you have to pay VAT in the Chinese custom office. The problem is, so there's two valuation. One is for the custom duty, another is for the VAT. Because importation VAT should be collected by the tax office on behalf of tax authority, and afterwards the custom office issue a VAT special receipt for the custom importation taxpayers. The special receipt for custom imports can be deducted as input tax in inland revenue. That's a problem. So the valuation between custom office and the tax authority, is there any conflict? Certainly, this conflict actually, because the custom officer hope the import price is high, there can be more custom duty. But the inland revenue, the inland tax authority hope the import price is lower because the import price is the input tax can be deducted in the inland tax authority. That's a problem. There's this conflict actually between the custom office and the tax authority. How to deal with this problem? In reality, in practice, I talked with some tax officer. They say no problem. Actually, the inland tax authority fully respected the custom officer's valuation. No problem. Actually, how to search out the open market price? Actually, in China, we mentioned that there are 3 norms in China. The problem is, especially for the business enterprises, 3 kinds of valuation standards are existed in China. The first is in tax law. Tax law gives out the standard. For example, in this case is for a non-monetary consideration and the way there's related parties, transaction circumstance, the valuation is mandatory. So tax law give out the standard. For example, in Chinese VAT and the business tax give a standard is average sale price standard. Second is in Chinese accounting standard. In 2007, central government introduced the international accounting standard. We introduced in this accounting standard they give out the standards in the Article 42. Gives them measures. One is historical cost, replacement cost, near net realizable value, present value, and fair value. Fair value just one of the measures, not all, just one. That's the problem. There is some conflict. Maybe there is a conflict between tax law and accounting law. So how to deal with this problem? No problem. According to Chinese Tax Management Act, tax management law, no problem. If there is conflict between tax law and accounting law, the tax law is preferred for the first choice. The third is standard provided by valuation standard. In 2005, Chinese government issued a series of asset valuation standards. And for example, in the Article 15 of asset valuation standard, the basic standard stipulates is for asset valuation, we adopt 3 approaches. One is market approach, secondly income approach, and the cost approach. So the problem is, but in the 2005 valuation stance, we actually learn lots from international value stance. So the international value stance actually affecting very much on Chinese valuation stance and the tax value too. The first, according to the Chinese valuation standards, the first methods for legal valuation is market approach. What's the market approach? The international valuation standard given definition actually. This definition is that. But in China, we go back to the Chinese VAT and the business tax. We know in Chinese VAT and the business tax, we adopt the market approach, but we not the right market approach. We use average sale price. Average sale price is many problem. For example, there is a case last year happened in Guangzhou, a middle court. For example, the Guangzhou real estate construction company versus the Guangzhou local tax bureau. And this case, in 2004, the plaintiff, the company, entrusted an auction house to sell this business building at the auction. The building was situated in Guangzhou. And but in the auction, just one Hong Kong-based company took part in as the only bidder, and the purchase is very low. The average purchase price is just very, very low, just 2,300. Guangzhou tax authority say, I don't agree the purchase price. Your price is too low and unreasonably. It was obviously an unjust low price. Then, based on the real estate transaction price data collected from the Guangzhou Real Estate Administration, the local tax bureau determined the total price should be, this number is about 2 times the original price. The defendant don't accept the determination, the sued in the Chinese court. But the Guangzhou Intermediate Court adjudicated tax bureau won the lawsuit. In this case, the local tax bureau and the Guangzhou court actually both determined the purchase price on the basis of average sale price. They collected the information in the same area and for averaging, according to the Chinese VAT and the business regulation. This is the first approach is market approach. Second is income approach. Income approach actually is popularly used in Chinese VAT and business tax. We can read it in the Article 16 of the VAT regulation and Article 20 in the Chinese business tax regulation. They mentioned that if we can use the market approach, we will use the income approach, use the cost plus formula to calculate the value. The third method provided by the valuation study is cost approach. In Chinese VAT and business tax, cost approach is failed to be used actually in Chinese valuation. But cost approach is popularly used in property tax. In property tax review, cost approach is very popular in China. Sometimes the cost approach is the last resort for legal valuation. For example, Hong Kong governments, this department is rating and valuation department of Hong Kong government responsible for the property tax. They insisted, this department insisted that in choice of valuation approach for rates and the property tax assessment, the choice you give a set order sequence. The first choice is market approach. If it doesn't work, then use second income approach. If not, then last is cost approach. Cost approach actually became the last resort for property tax valuation. This is Hong Kong legislation. Now, after that, I give my conclusion. In China, legal valuation is a new research area in Chinese tax law. So my research is just now really simple. Secondly, in recent years, tax valuation became more and more complicated in Chinese business tax and VAT, especially in the intangible property transaction and the financial instrument transaction. Very difficult for the tax officer to determine. Yes, sir. Another problem is legal valuation exists in three norms. One exists in Chinese tax law and accounting standards and valuation. How to deal with these three relationship? That's a problem. The tendency is, according to the academic world, or in academic world, we appeal for a convergence because the separate is too difficult. But we turn back to Chinese VAT and business tax. Until now, we still adopt 1994 legislation, adopt the average sale price standard as the main approach for legal valuation. That's really backward now. It's really apparently backward now. So we often think about whether we can learn from the new corporate income tax introduced fair value standard in Chinese VAT and business tax. That's a controversial topic. More further studies. These questions are deserved to further study in tax valuation. For example, they say another problem is burden of proof is very important in the legal valuation. And the last is actually in China. the tax valuation in recent years often damage the inherent value of freedom of contract. That's a problem, become a very, very serious problem in China. For example, two companies sign a contract, they bargaining the price. It's because the market is competitive very seriously. So often the contract price is very low. So if when you file tax return to the tax authority say too low, your price is too low, I don't agree. Then tax authority will determine, use its discretion to determine the price. Normally the determine the price by the tax authority is really high. So that's a problem. So what we often say in China, the freedom of contract is no use actually in the reality, especially faced to meet the tax authority. Okay, that's.
For your presentation and your paper. As a matter of fact, we share a lot of problems and difficulties between Italy and China. You know, if I remember correctly, there was a sort of anti-avoidance provision in French tax law dating back to the 80s that sounded like when you sell a real estate. I was mentioning the case that you described before, when there is a company selling a real estate to another one to a certain amount of euro, francs, or whatever. If that amount is very low, then the government has the opportunity to opt in and buy it on behalf of the private investor. So that was a sort of threat on this to accept or to use it.
Marco, may I?
Sure.
May I raise a question for? I remember in 1993 when in China the VAT law entered into force. And I remember that was a terrific case because the law was enacted around November, December of 93 and entered into force on 1st January of 1994. So it was so quick, so sudden, and that astonished us Europeans where to enter into force for a VAT law it takes years. So the Chinese managed to have a total revolutionary indirect tax system in a couple of months. What about, so my question is about the process, the internal process of law approval in China. At the time in 94, it was really astonishing. I see that China has introduced many, let's say, standards, the business tax, and then international accounting standards, and business tax, and then some new issues within business tax. Is the process still so quick internally within the Chinese government, or there is also an involvement of the industry, the banking industry, the industries, the professionals, the universities? So is there a wider debate before approving certain or so important new features in Chinese tax law, or it is like 1994?
I can ask a bit. Basically, I think the situation you mentioned, you described in 1994 or back to that time, that's the case. The government may just issue some new legislations or rules or principles within very short notice without any announcement beforehand. But I don't think that's the case nowadays. For example, just take something for example. The personal income tax nowadays is the hot topic in China. Many people get involved in the process of legislation because the government wants to reform the personal income tax. And before that, the government proposed or published a proposal to invite public opinions. Yeah, and I think that's a tendency. That means nowadays the tax authorities and also the governments realized it's very important to get people involved in the process of legislation. Now the final decision-making power is still with the government.
But there is a process.
The government needs to respect the public opinions. Otherwise, in practice, there will be a lot of problems. And in China, that's always the case. We say the government has policies, hard legislation, we always can find solutions. Yeah, that's the case.
Thank you very much. That answers my question.
Okay, now it's time to move from Guangzhou to Taipei.
Yes.
I think it's time for Eric to provide us the perspective on Taiwan, on the crisis and the responses that you implemented or used to financial crisis.
Thank you, Professor. Actually, it's a great pleasure to come here to share with you about our Taiwan experience, in specific Taiwan's tax policy in response to the global financial crisis. Actually, before I came here, I was told that each speaker was only given 10 minutes for the presentation. So that's the reason why I prepared not many presentation material, just like Professor Yang. So there are only like 19 pages for that. But that's okay because I'm not going to give a detailed introduction to Taiwanese tax law. It's not possible. So I'm going to only give a very brief introduction about maybe the tool and the perception, Taiwan government perception in dealing with the global financial crisis. Before that, I would like to briefly mention about Taiwan's tax system. Taiwan's tax system basically they follow the German tax law in the very beginning. But after that, German tax law is actually is not acting as the reference tools anymore. Most of our Taiwan tax authorities they tend to learn from U.S. law because most of those Taiwan tax officials they went to USA to learn tax law. So actually, in recent years, most of those tax amendments they follow the U.S. model. And but having said that, every time when there is a debate for tax reform, every theory actually doesn't work because Taiwanese government actually they believe in pragmatism. Actually, they are very practical. They do not believe in the theory. They tend to maybe seek advice from the CPA firm, but not the legal examiner. So that's I think maybe that's a basic background that you may be aware of before I get into maybe the strategic, maybe the executive introduction of the Taiwan tax policy. Okay. I simply try to specifically follow the instruction from Professor Michael about today's topic. So I split my presentation into 3 parts. The first part is the phenomenon, and then the policy, and then the conclusion. Okay. As you may know, Taiwan is actually also a very tiny city. Although it is a rich country, but it's very tiny and active in only the supply of the industrial products only, and such as like computers and other electronics. Everyone hopefully know that Taiwan actually is a manufacturing country, big country, in terms of the manufacturing function. But other than such a player role as the supplier in the global value chain, however, in the financial sector, we tend to be very conservative. Taiwan actually has not been very effectively connected with the global financial network. Several major local banks actually play dominating role in the domestic financial activities, and the foreign banks they are not active player in the traditional loan business, but they only take part in the merger acquisition consultation, and they have limited scale of high net worth private banking business only. So financial innovation in Taiwan was and is now still under heavy regulations. Therefore, actually, I won't say Taiwan's financial sectors is closely connected with the global financial market, I would say, because innovation itself actually is not active. As such, although the global financial crisis did do harm to Taiwan's economy, but the impacts actually have different weight over different sectors, not every sectors. Therefore, I would like to separately analyze the financial crisis impact upon Taiwan into the impact on the financial sector, impact on the stock market, and the impact on the consumption and the investments. Okay, firstly, let's go to the impact on the financial sectors. In summary, the financial crisis impact on the Taiwan's financial sector was not as significant as the impact on the other countries. I'll say, even nowadays, I'll say, Taiwan's financial authority still holds quite a conservative views on the financial innovation by Taiwan's financial institutions. Therefore, domestic banks mainly focus on the business of their corporate and individual loans only as their major source of income. Although those foreign banks have had advantageous positions over the M&A consultation and the private banking business, as I just mentioned, but there are not many M&A deals with big scale in Taiwan. And besides, the legality of some private banking business in Taiwan is still vague. They simply do the business on a flight back and forth basis. They simply have their headquarters in Hong Kong and in Singapore, but not in Taiwan, because Taiwan's regulation tends to be hostile to those private banking business, because they actually have concern maybe they will do some tax evasion planning for the Taiwan networks. So actually, the private banking business is legally sensitive. Therefore, except for those super rich people, most of the investors in Taiwan have relatively limited resources and access to the global innovative financial products. Innovation in financial products was and is now still under the scrutiny and approval of the financial authority. What is a little bit sarcastic, simply because the financial sector is not so globally connected. Therefore, actually, the financial sector does not suffer a loss, just like the other countries. So, as you can see, that economic impact on the Taiwan's investments and consumption is different story. Why? Because, as I just mentioned, Taiwan's economy is basically export-oriented. Purchase orders from foreign customers greatly affect Taiwan's manufacturer. These manufacturers are Taiwan's major GDP contributors, and they do the high-tech business. Given this situation, Taiwan's economic performance is vulnerable to the downturns in the world economy. The global financial tournament obviously resulting in the huge decrease in the demand of our foreign customers. Consequently, the purchase order to Taiwan dropped sharply to about 44% in the period from year 2008 to January year 2009. The slump in the purchase orders to Taiwan subsequently further led to the decreases in Taiwan's investment and consumption. Well, in addition, the global financial tournament inflicted severe damage as well on the Taiwan stock market. Stock market actually have long been connected with each other in the global basis. The pervasive downturn in the global stock market also beat the Taiwan stock market, without exception as well. Besides, observing the collapse of some giant companies and financial institutions and the experience of Taiwan's economic downturn, both Taiwanese and foreign investors seriously lost their confidence in Taiwan's stock market. But as a matter of fact, in terms of the tax solution to recover the confidence of the stock market, there's not much the government can do, as you may or may not know, because in Taiwan, capital gains from trading of stock are free to income tax, but only subject to a very nominal stock exchange tax only. Therefore, it is already having to trade stock in Taiwan, and if we would like to encourage more stock tradings in the capital market, the government actually need to find out another way, but not the tax tool. Okay, so that's the reality. Therefore, the policies, either the tax and the non-tax policies taken by the Taiwan government actually to tackle the impact of the global financial crisis are mainly aimed to alleviate the declines in Taiwan, the investment, the consumption, and the stock market, but only very few to enhance the stability of the financial sectors, because that doesn't help a lot. Okay, now let's go to the policy. Okay, Taiwan's government actually is a true believer that tax cut is the best solution. Okay, so the way that they try to tackle the financial crisis, actually, in one word, is try to cut the tax in different way. Okay, in late year 2008. Taiwan's government adopted a policy tool named as the Economic Revitalization Program, which, among others, includes several tax policies aimed at slowing down the economic decline. And thereafter, they also pursue additional tax policies, such as the tariff concessions under the Cross-Strait Economic Cooperation Framework Agreement with China. Because China actually is our most important trading partners, but there's no before such a agreement. Actually, there's no terrific concessions. Therefore, give us a disadvantage as compared with the other Asian countries. So this is the most important task for the Taiwanese government, try to come up with such an agreement with the China government. Okay, let's go from the tax policy for encouraging the domestic consumption. Tax benefits agreeing on the individual income tax is significant. As you can see from my slide, the eligible amounts of individual income tax rate deductions were increased from 33 to 65 of the original data amounts, which is huge in our tax reform history. In addition, the individual income tax rate for the lowest 3 tax brackets were decreased respectively by 1 percentage point. Specifically, Taiwan government intended to increase the disposable income of individuals by alleviating the individual income tax burden, so that people can be more willing to make assumptions. So that's their intention. Okay, the government also pushed down the estate and the gift tax rate. So you can see the original progressive estate and the gift tax rates with the highest tax rates of 50% was lowered to a flat rate of 10%. It's also very significant, from 50% to 10% flat. Further, the eligible exempting amounts from estate gift tax were also increased substantially. As you can see, Taiwan, although they tax the estate tax and the gift tax on a worldwide basis, but in reality, Taiwan as a small and tiny city actually have very few tax treaty with the other country. So there's no such a information exchange channel with the other country. So although the domestic tax law, I mean the estate and the gift tax law, indicate that they will tax the estate and the gift tax on a worldwide basis, but when the source of the tax actually is located outside Taiwan, which is offshore income, there's no way that they can trace the kind of tax. Therefore, with the view to facilitate those high net worth people try to remit their offshore money into Taiwan to provide maybe more funds to the investment, they simply need to lower down the estate and the gift tax rate, so that they are willing to simply make their money back to Taiwan. Therefore, to further increase the investment. So that's basically that's their perception. In reality, I'll say there are still actually, even though there is such a change of law, the high net worth people still hesitate and they're reluctant to remit their money back to Taiwan. The reason why is that there's not only the estate tax and the gift tax concern, there are also income tax concern. Okay, by transfer their money into Taiwan, the government will have a clue and the information on actually their total income in Taiwan and outside Taiwan. So even though the gift tax and the estate tax has already reduced it to 10%, the income tax is already there. So income tax is also needs some further like a reduction. So here, as you can see, the original progressive corporate income tax rate with the highest tax rate of 25% was lowered to a flat rate of 17%. This is another very big step of Taiwan tax reform. As you can see, from 25 to 70% flat means a great incentive for the Taiwan company. Actually, at the time when there is a debate whether we would like to reduce the tax rate from 25 to 17, the government is thinking that, okay, if we would like to go to a flat rate of 17, we would take off those tax incentives already provided to the business. That would be fair, right? But as you can imagine, everything in Taiwan, particularly in the tax area, is always, I would say, politically sensitive. You simply, it is not easy that you take out those incentives from business that they already got, right? So eventually, the taxpayer get the best of two worlds. They get a flat rate of 17%, and they also, upon their insistence, they also maintain the tax benefits, the incentives to those businesses. Okay, so eventually, I'll say, given that because in Taiwan, both parties, they need to win the election, right? So they need to please the taxpayer. After such a tax reform from a progressive tax rate to flat rate of 17%, I think Taiwanese government need to worry about their future budget because there's still no way out for them to try to meet the deficit of the budget. I don't know because in Taiwan this is a very difficult issue, but nobody dare to touch base on that. Just like the capital gain reform for the stock trading, there was a proposal from the tax authority on we try to tax the capital tax again, but actually this proposal quite soon was simply taken off because there's no way that every time when the government would like to propose to tax the stock trading, actually the taxpayers feel unhappy and they would not like to elect on the party. So that's a very difficult issue. Okay, for the purpose to encourage the domestic and foreign investors to invest in Taiwan, they also the Taiwan government also tried to accelerate the signing of double taxation agreements with other countries. You may or may not know, during year 2009 to year 2010, only 17 countries have signed a tax treaties with Taiwan since 1982. And we try our best that within this year we have signed additional 3 double tax treaties with Israel, Hungary, and France. And in the near future, maybe we will try to have more double tax treaties to sign with our country, because simply by signing such additional DTAs, we simply can try to encourage more investment and maybe the trading relationship with each other. Okay, and the last policies for the Taiwanese government to promote the Taiwanese economy is try to sign off the ECFA with China. As I just mentioned, mainland China has been Taiwan's largest trading partner since the year 2000. But the mainland China continued to impose, previously imposed tariff of 5% to 10% on Taiwanese imported goods. Besides, starting in year 2010, the countries of the Association of Southeast Asian Nations, so-called the ASEAN, and the mainland China established a free trade region. by which each party could exempt from tariff against many goods from the other parties. So without FTA with mainland China, Taiwanese exporters are at obvious disadvantage compared with those Asian exporters. It's quite obvious. Even though both Taiwan and the mainland China are WTO members, but as a practical matter, mainland China would not like to lower the tariff for goods from Taiwan through the WTO mechanism because, firstly, according to the WTO regulations, without a free trade agreement, the mainland China simply cannot lower the tariffs for goods from Taiwan without extending the same treatment to all the other WTO members. Obviously, China is reluctant to lower the tariffs on goods to other WTO members exporters on a general basis, right? Therefore, the agreement in between these parties is very important. Eventually, on June year 2010, Taiwan and mainland China eventually signed off the ECFA, serving as the framework agreement, which is one of the ways to achieve the FTA. In summary, the benefits to Taiwan from ECFA is quite obvious. Taiwan will not be marginalized from the other countries' regional economic integration schemes. That's the first. And Taiwan also do not need to. I mean, the exporters does not need to suffer the tariff disadvantage. As of now, both parties has already reached a early harvest list of tariff concessions for each side and certain industrial products as well. Okay. The conclusion, I'll say, Taiwan actually government do not establish a tax break policies in a general way, but most of the tax policy taken by the Taiwanese government after the financial crisis, they do not appear to have a sunset clauses. Okay, but Taiwan also have not adopted a systematic change of its taxation, but only try to reduce certain tax burden through various approaches. As a matter of fact, I'll say, due to the corporate income tax rate of 17%, Taiwan actually has become a tax-efficient investment choice as compared with Hong Kong and Singapore. And Taiwanese government actually is expecting more investment, more inbound investment from foreign companies. But in terms of the tax policy level, I'll say the Taiwanese government tends to be quite friendly to the taxpayer. But at the collection level, I'll say, for example, like a tax avoidance, Taiwanese tax authority tends to be very restricted on the tax planning because of the tax. They tend to believe that if the tax policy is so friendly, you simply need to pay the tax in an honest way. Otherwise, they will lose both sides, right? So any tax planning, in case the tax authority tends not to buy in the format of the transaction, they will tax by their own based on what they tend to think in a substantive way. So always, I'll say, in the field of tax planning, from tax authority's point of view, substance will always overform. Okay, so that's the reality. And the Taiwanese courts tends to follow the interpretation from the tax authority. And as of today, we still cannot find a black letter rule for analyze what would constitute a tax avoidance and what would constitute a tax evasion. It's always subject to the tax authority's discretion. So as a tax practitioner, it's very risky for us to try to advise our clients on a very innovative transaction model, because maybe later on because of it's very difficult to try to predict how the tax authority is gonna evaluate the tax application of the transaction. So maybe that's the obvious issue in Taiwan as well. So I'll say Taiwan as a whole, the tax policy is a very friendly tax environment. But in terms of the specific, in a micro basis, the collection, taxpayers shall still be very aware of. Maybe that's the reason why we still do not find like a substantial foreign direct investment into Taiwan. They go to China still. So I don't know, maybe they still need to find another way, try to encourage more investment to Taiwan. That's why
Thank you, Eric, for your presentation. I was thinking about one of the latest phrases that you said when you said, well, the attitude of the Taiwan tax inspector is very aggressive on the basis that they say, well, look, tax rates are so low, the system is reasonably simple that you cannot ask for more. That was the best meaning. Well, believe it or not, well, in Italy the attitude is the same, but the system is complicated. So you need to have high rates, but nonetheless a very aggressive attitude of our tax inspectors. And well, jokes apart, we ended with mainland China, then we moved to Taipei in Taiwan, and we now move
Sorry,
backward.
I'm still focused on mainland China, but I will briefly discuss the Hong Kong taxation system.
Oh, okay, sure, you'll do both.
Oh, that's okay.
In 30 minutes.
Okay, no problem. I will try to finish as soon as possible,
Sure,
because I realize now it's lunchtime, and initially I prepared to say good morning everyone, but then I find now I should say good afternoon everyone.
But I told you that this is going to be a Spanish session, so the lunch shall be at 2 or 2:30.
Oh, okay.
No worries, no problem at all.
So my topic is still focused on China's taxation. I will look at the impact of the global financial crisis and how China's tax systems have been changed as a result of the GFC. Here is a map. You can see this is China, and here over there that's the capital, Beijing, and here is Guangdong province, and here is Tibet, and here is Xinjiang. I didn't download too many pictures showing how beautiful China it is, but I will show you something at the end of my presentation. This is a roadmap of my presentation today. I need to explain a little bit. My presentation will mainly focus on the indirect taxation system, because as Professor Yang has mentioned, indirect taxes in China, including value-added tax, VAT, consumption tax, which is a peculiar Chinese name. In the Western context, it should be excess tax, business tax, and other kinds of indirect taxes. These indirect taxes have contributed almost more than half of the revenues for the government since their inception, so it's quite important. And mainly after GFC, during the GFC and after GFC, the major changes have been happened in the indirect taxation system instead of direct taxation system. So my presentation will be focused on the indirect taxation system. Here's the roadmap. And I will firstly look at the GFC and its impact on China's economy. Okay, and then I will look at the China's tax response to the GFC. And before conclusion, I will briefly examine the ongoing tax reforms in China, and also I will briefly discuss the taxation system in Hong Kong. You will say at a later time why I chose China as a case study instead of Hong Kong, because Hong Kong's taxation system is very stable. There are almost no changes during and after the GFC. As you may have already known, the global financial crisis was originated from the United States. China per se did not have the so-called financial crisis. However, China cannot be isolated from the challenges. The challenges have brought significant changes to China's taxation system. In the past 3 years, from 2008 till this year, tax reforms included structural and targeted tax reductions and a significant shift to move the most important indirect tax, value-added tax, from a production-based system to a consumption-based system. However, I need to elaborate more on this change. Before, I will explain this later. Nowadays, we say although there is a shift from the production-based to a consumption-based, but still the consumption-based system is not so pure. It's still partially production-based and partially consumption-based VAT. My research question here includes the three questions. First, to what extent are these reforms directly responsive to the effects of the GFC? Second, using China as a case study, is it possible to propose a universal tax response to financial turmoil? And thirdly, how to manage tax in a changing world? It's not a very easy question. Firstly, the GFC and its impact on China's economy. To China, transmission of the GFC was primarily effected in two ways. That is financial channel and international trade channel. As to financial channel, there are two related questions. First, did the GFC pose a real threat to the strength of China's financial system? Much like Taiwan, as compared to those suffered financial institutions in the United States, the United Kingdom, and the European Union, the amount of losses of the subprime-related assets in China was much smaller. Moreover, China has enormous foreign reserves, which made the losses relatively affordable. The second question is, to what extent did the GFC disrupt foreign indirect investment, FDI, in China? The answer is yes. The FDI was indeed negatively affected by the GFC. There was a period of negative FDI growth for 10 months after the outbreak of GFC, which was much worse than the situation in 1997 Asian financial crisis. As to international trade channel, I should say this part is most hard hit by the GFC. As you all know, China has long heavily relied on international trade, that is, exportation, to spur its economic development. The exports were hard hit by the GFC, as you can see from this table. This table shows the proportion of exportation to GDP in China from 1994 to 2009. You can see from here, after 2007, 2008, and 2009, there are evident decreases. This table shows China's exportation in the post-GFC period. There was a significant decrease from September 2008 until May 2009. The GFC had other far-reaching effects on China's economy and society, which cannot be reflected by the GDP and exportation figures. In China, the income distribution between urban and rural residents are quite severe, as you can see here. There is a significant increase of the urban residents' incomes over almost 10 years. But here, for rural residents in China, there are only very moderate increases. One of the likely consequences of the GFC has been to aggravate the big wealth gap between urban and rural residents in China. Many migrant workers in China who went to cities or towns for relieving poverty only found difficulty in securing or obtaining jobs in cities during the GFC period. Having realized these problems, the Chinese central government reset the GDP growth rate for 2009 at a moderate level of 8%. The government also took various measures to combat the GFC, including tax measures. Before discussion how the government responds to the GFC, I would like to introduce a certain background. It is now accepted by the central Chinese government in Beijing that China's economic development model of export-oriented, high input, high pollution, but low output is no longer affordable. China needs to transfer the economic growth focus from exportation to domestic economy. Indeed, the proportion of consumption, private consumption to GDP in China has been on the decline from 2000 to 2008. Even though the GDP had a significant increase throughout this period. Given the importance of indirect tax regime in the total tax revenues, as you can see here, China heavily relied on indirect taxes, and from the introduction of VAT, business tax, and consumption tax in 1994, more than 50% of government revenues joined from the indirect taxes. So the major changes were made in the indirect taxation system. In short, there are 3 changes in this system, which includes first, reduction in certain tax rates; second, transformation of China's VAT system; and third, improvements to China's social security system. And first, the reduction policy. The government reduced the tax rates on vehicle acquisition tax in 2009 and 2010. It should be noted the tax reduction policy on vehicle acquisition tax is no longer available from the very beginning of this year because the Chinese economy has been recovered from the crisis. The government thinks that's not necessary to continue this reduction policy. There are also reduction on the consumption tax rate. The rate on cars with low emission capacity was reduced from 3% to 1%. However, the consumption tax rates on cars with a high emission capacity have been increased dramatically. Almost, my memory is that for cars with emission capacity of more than 4 liters was increased from 20% to 40%. So you can say there is a different policy on the tax cut issues. Apart from this, the government also provided fiscal incentives for rural and urban residents to consume. And also the government strengthened tax administration and collections because the government think combining tax evasion and avoidance were deemed necessary in economic difficult times. The second response, which is the most important response to the GFC in China, was to transform China's VAT from a production-based to a consumption tax system. China formally introduced VAT in its most important tax reform in 1994. The 1994 Chinese VAT is a production-based system. Why? Because the input tax on purchases of capital goods cannot be deducted from output tax. This led to duplicated impositions on enterprises in general. In particular, it penalized capital-intensive techniques. These problems have become more severe during the financial crisis because this increased the burdens of enterprises. The second problem with the 1994 Chinese VAT is that this VAT only applied to goods, tangible goods, and certain services. I should say very limited scope of services. Includes processing, assembling, and repairing. Most service sectors, as Professor Yang has mentioned, are subject to business tax. For business taxpayers, there are no input tax deduction right, so they are subject to double taxation as well. Towards the end of 2008, the government wanted to help both enterprises and financial institutions to deal with the negative effects of the GFC. The government introduced modification or revision of the Chinese VAT system. The most significant change of the 2008 VAT reform was to partially transform the production-based system to a partially consumption-based VAT. Under the government revision, the input tax paid on purchases of equipment and non-real property fixed assets can be deducted from output tax. However, for other kinds of capital goods, the input tax still cannot be deducted. It is very limited, as you can see. However, it marks an important step in relieving enterprises' tax burdens during the difficult time. Another significant or another important tax policy with regard to VAT is the adjustment of the VAT refund rate for exportation. China notionally applied the destination principle in the VAT system. However, the VAT refund rate for exports has been controlled by the central government. The central government can adjust the rates for exportation enterprises from time to time in order to encourage exportation or to avoid trade conflicts with other countries. So this is used as a kind of tax policy issue. After GFC, the government adjusted for sometimes for exportations, and the objective was to help export enterprises. The government is still considering to extend the tax base of VAT to cover business tax, so that the goods and the services can avoid double taxation. And the third response is to improve the social security system. Sorry. As I mentioned before, the private consumption in China has been on the decline. The government has realized if it wants to change the current economic development model, it needs to encourage people to consume, encourage people to spend more instead of saving more. There are a very interesting phenomenon in China. As compared to most developed countries, China has a very, very high saving rate, especially for individuals. How to encourage people to save less and spend more? The government wants to improve the social security system, because improving the social security system and the increasing consumption are essentially interrelated. If my, let's say, housing, healthcare, pension can be guaranteed by the government, then I don't need to save anymore. So that they are interrelated. The major improvements in the social security system have been in the medical system and also the pension systems. Details, I would ignore the details. These are just tax responses, and where these tax changes effective, we can evaluate from two aspects. First is the gross effects of the tax changes, and the second is the budgetary effects. Here you can see, this is the GDP growth rate from 2007 until the second quarter of 2011 this year. In 2009, just remember, the official expectation of GDP growth was only 8%. However, eventually China reached, the growth rate reached to 9.1% in 2009, just considering the global context in that year. Also, in 2009, thanks to the increase in VAT refund rates for exportation and other measures, China replaced Germany as the world's #1 exporting country. Also, there has a slight increase in household consumption in 2009. For the budgetary effects of the tax reforms, this data shows both the total tax revenues and revenues from VAT, consumption tax, business tax, and vehicle acquisition tax increased to varying degrees. I add one more slide here to show how the motor vehicle purchases can be affected by the tax reduction policy. This is one area where the figures may be startling, and the effects may not have been impacted so much by China's stimulus package. This diagram of the distribution of 4 trillion yuan stimulus package by the Chinese government is provided for your reference. Basically, I just want to mention here, the tax cut policy will really effective in increasing both production and sale of vehicles, and also boosting the consumption tax revenues that year. That's something really, really effective by the tax reduction policy. For other kinds of effects, you may argue that that increase would be affected by a number of factors instead of the tax reduction policy. However, this area clearly shows the reduction policy has a direct relationship with increase of tax revenues and also increase of production and sales of vehicles. Also in that year, 2009, China became the world's largest car producer on the market. And finally, I want to figure out to what extent were these reforms responsive to the GFC. It's not a very easy question. It requires comprehensive research with the use of economic methodology, which is beyond my scope, the scope of my research. However, I think we can say, although it would be overreaching to argue that all these tax changes and reforms were directly caused by the GFC, it may be fair enough to argue that the GFC had been an important momentum for the government to accelerate the tax reforms and the changes. Finally, I just want to mention what tax reforms are going on at the present. I'm not sure if you know the 12th five-year plan. In China, the five-year plans are a series of initiatives proposed and driven by the Communist Party of China to shape the country's economic and social development for every span of 5 years. And started since the middle 20th century. Now it is the 12th five-year plan, which covers the period of 2011, this year, until 2015. The 12th five-year plan is very important because it provides guidance for what the government is going to do next. Tax reforms are the one most important part of the 12th five-year plan. According to the 12th five-year plan, the next tax reforms would include the following aspects. First, indirect tax. The government wants to merge VAT and business together, so that the double taxation and the other kinds of problems with the VAT system can be reduced or can be avoided. And also the government wants to extend the tax base of consumption tax to include more natural resource consumer goods, because the government wants to encourage energy saving and also environmental protection. The second change would be in the personal income tax. As I mentioned, nowadays the government just published its proposal to solicit public opinions to say how to change China's current individual income tax system so that the current system can be more efficient in income redistribution. There are significant wealth gap between urban and rural residents. Also, there are significant gap between different regions. So the individual income tax system should play more efficient role in redistributing wealth among individuals. And finally, there are reforms in other taxes, which include real estate tax and also resource tax. Also, the government wants to introduce a set of environmental tax system. Finally, the tax administration system. It is quite problematic. In 1994, the government introduced a so-called tax sharing system. Tax revenues or taxes are separated between central, local, and also a kind of taxes called shared taxes. That means the revenues are shared by both the central government and the local governments at a certain proportion. The tax sharing system lacks a very sound local tax system, and the local governments are left with little authority in formulating implementation rules of local taxes in their respective jurisdictions. This has led a number of problems and also severe things like corruption. According to the 12th five-year plan, the central government wants to further improve the current tax administration system. And finally, Hong Kong. Hong Kong is very simple. The Hong Kong's, I don't think Hong Kong's income tax system can be called income tax as such, because basically Hong Kong's taxation system is a scheduler. Income taxation system is a scheduler in nature, with 3 separated taxes imposed on 3 different types of incomes, which include salaries tax, profits tax, and property tax. Salaries tax are charged on employment income. Profits tax are imposed on profits of a business, and the property tax is imposed on the rental value of immovable property. The tax system, one of most important features of the taxation system in Hong Kong is that the income taxation system is based on source principle, which means that only the income derived from or rising in Hong Kong are taxed. The residence status is completely irrelevant to tax liability. Also, there are no capital gains tax, no VAT or GST. There are no domestic withholding tax on dividends, interest, and royalties. So it's famous as being a low tax jurisdiction. The tax system is quite stable, even during and after the GFC. However, the Hong Kong government has adopted a number of measures to help individuals deal with the negative effects of the GFC and also inflation in recent years. Finally, one thing I want to mention here is in recent years, there was significant expansion of double tax agreements network in Hong Kong. After the liberation of exchange of information articles in March 20, 15 comprehensive double tax agreements have been signed by the Hong Kong government with various Asian and European countries. These newly signed tax treaties adopted the more liberal 2004 OECD model of exchange of information articles. It shows that Hong Kong government in a changing world needs to change this aspect because the government doesn't want to be in the so-called grey list or blacklist. They want to encourage further investment and also other kinds of things, good things into Hong Kong. Although Hong Kong's taxation system is successful in terms of tax collections, it is still facing significant economic challenges from competition from Singapore, Taiwan, mainland China, and also significant social challenges, for example, healthcare and financial problems of an aging population, and also the democratic requirements from the general public.